Hi my loves, welcome back to the Riggy Report. My name is Riggy and today we're going to talk about why banks have actually stopped doing HELOCs, which are home equity line of credits. First thing we're going to talk about is what is a home equity line of credit. So basically it's when you take out a line of credit and use your home as collateral. So reasons why people want to do that is so that they can get a lower interest rate and an easier time getting approved, because sometimes you might not have the credit, you might not have the income to get a line of credit, or sometimes you just want to do like repairs on your home, and during that time, you know, home equity line of credit is a great choice. It's a great tool to use. It's a great utility. However, banks have, if you try to go to a bank like today, right now, to try to get a HELOC, you're not going to be able to, because most of them are not offering it anymore. And the reason why they're not offering it, some banks are saying, oh, it's just because of general market conditions or some bullshit about fucking COVID, but that's not the actual reason. The reasons why banks are not offering HELOCs anymore is because they know that the value of the homes right now are not enough to support the HELOC. Basically, homes are too expensive and they know the houses are not worth what the market is saying that they're worth, because they have like insider information and stuff like that. So they know that the house prices are not worth it. House prices have risen like almost 100-200% in the past year alone. So homes that were like previously for like $200,000 are now selling for $400,000, and banks know that the house is not really worth that much, even though they're willing to give you a mortgage for that price. So you might be asking yourself, well, why would they give me a mortgage for $400,000 if they think the house is only worth, let's say, $250,000? The reason is because they don't keep the mortgage when they make it to you. They make their money in origination fees and closing fees, and then they package the loan up and they sell it to the next sucker. So they don't even get to keep the loan. Someone else has it. And if you bought a house in the past 2-3 years or the past 5 years, you keep the mortgage, you pay the mortgage for a couple of months, and then one day you get in the mail a letter that says your mortgage has been sold to another company. And that's what's been going on. So they don't care if they're giving you a mortgage for a house they know is not worth the price, because at the end of the day, they only have to worry about keeping that loan on their balance sheets for maybe 3 or 4 months before they package it and sell it to someone else. It's going to be their problem. However, if they give you a line of credit with the home as collateral and they know the home is not worth that, that has to stay on their balance sheet. So if you are, someone has been trying to get a home equity line of credit and you haven't been approved, it's not really anything to do with you personally. It's just what it is, and they're not really going to tell you that. They're not going to sit down and explain it to you like I'm explaining it to you, but that's just the real deal. That's what it is. Yeah, pretty much that's it for today. If you guys have any questions, don't forget to leave your likes, comments, and everything else down below. You have a great